This is a quick video on opening cash, net cash and closing cash to help you tell the difference between the three terms. So opening cash is the amount of money a business or a person has at the beginning of a time period, like at the start of a day, week or month. For example, if you started your week with €20 in your wallet, your opening cash for that week would be €20. Basically, it's what you have in your wallet or bank account at the start of a period of time. Net cash then is the money left over after all expenses, which is money spent, has been subtracted from your income, which is money earned during a period of time. So say you earned €50 this week in your job and spent €45. This would mean that your net cash would be €5. Closing cash then is the total amount of money you have at the end of a period of time. This is calculated by adding the net cash, which we learned is what we have left over, to our opening cash. So going back, we started the week with €20 in our wallet. This is called our opening balance. We earned €50. We spent 45, so this means we had €5 left over, which is our net cash. We add this €5 we have left over onto our €20, which we started the week with, and this means we're ending the week with €25, and that's our closing balance. I'll give another example of what it might look like on a personal cash flow. I have a business cash flow video that goes into more detail, and it's based off a junior cert question, and I'll link the video below. In the example we're going to look at here, we're going to look at this from your point of view over a period of time. We'll say we're making accounts for a month. We have receipts, which would be like your income from allowances and a job. Your allowance is €25 and your wages is €100. So this is all the money you've received within a month. Now payments is the money we spent within a month, and we can see here we have phone credit for €25, lunch for €9, we spent €8 in the shop, bought new trainers for €80, €4.50 for lunch, and finally another €3.50 in the shop, which all adds up to €135, meaning this month we spent a total of €135. So we can see here circled are our total receipts, which is what we received, and this was €125. And our total payments, which is what we spent, is €135. So we'll just write this over on the right hand side. So basically at this point, we received 125 and spent 135, which leaves us with a net cash of minus €10. We'll write this and we'll put this in brackets to indicate it's a deficit or a minus. This is telling us we spent €10 more than we received within the month. You might think at this point that's impossible to spend more than you've received, but this is where the opening cash comes in, and we can see this in action. We'll say we started this period of time with €50 in opening cash. This allowed us to spend a little more than we received. It shows overspending is possible when you have an opening balance. So our net cash is minus €10 and our opening balance was €50, which means we're left with a closing balance to the end of the month of €40. To quickly recap, in the month we earned €125 and spent €135. This left us with minus €10 in net cash. However, we started the month with €50 in our account. At this stage we know to add our net cash and opening cash together. When we do this, it leaves us with a closing cash of €40, which is what we're finishing the month with. Our closing cash for 1 month becomes our opening cash for the following month. So if we were to do the following month's accounts, our new opening cash would be €40 because that's what we have left over. Rewatch this video a few times, pause it until you get the hang of it, and it might take a few watches, but these examples should help.